Today, our stock analysis will focus on the apparel brand Nike, ticker NKE. I'm sure everyone has owned a Nike product at some point, and over the past few years, the stock price has been taking a hit. So let's take a quick minute and look at their financials first. And starting off with revenue, pretty much increasing yearly since 2015, except for 2020, which probably had to do with COVID. And for the past 10 years, the overall growth has been around 70%. Then net income and earnings per share, a little more choppy than revenue, but overall, the growth from 2015 for net income is up about 75% and more than 100% for earnings per share. Next two data points I like seeing. First is dividends, which I want to see growing over time, which Nike has clearly achieved this since 2015 and up 170% overall. Then shares, which we want to see declining. And though 2021 and 2022 did show an increase, but overall for the past 10 years, share count is down around 15%. And lastly, free cash flow. Also a little choppy, but still. Nike generates at least $1 billion each year, and recently in that $4 to $6 billion range. So now let's jump down and perform a stock valuation next. Here's the valuation setup, and we will look at a few different scenarios. But first, the net income CAGR for the last 10 years, 6.36%, while earnings per share CAGR at 8.1%. Now we're going to take about the average of these two to use as our short-term growth rate in this scenario, which we're going to use at 7.5% over the next 10 years with a 10% discount rate, and we are using a 3% long-term growth rate. Now, this gives us an intrinsic value of $53.38, and with a 90% margin of safety, it brings it down to $48.04. So the stock price is trading around $73 with a 52-week low at around $71. So well above my valuation, and I wouldn't increase my short-term growth rate. I don't think they're going to grow more than that 7.5%. So another data point we can look at is the discount rate. Now, I typically like using 10%, but we're going to look at lowering this and using a 8% discount rate. So rather than looking for a 10% return, we're going to look for an 8% return. So let's make that change and see how it impacts the valuation. Now, with an 8% discount rate, the intrinsic value jumps up to $77.27, and with the 90% margin of safety, brings it down to $69.54. So the stock price is trading around $73, so you're not getting quite of a margin of safety, but still it is showing some value there. But next, let's say you're a little more bullish on Nike, and we're going to raise that short-term growth rate now to 9% and see how it impacts the our valuation. With a 9% short-term growth rate, now intrinsic value jumps up to $87.81, and with the 90% margin of safety, brings it down to $79. So we're definitely seeing more opportunity here, but we're going to look at one other scenario before we move on, and we're going to take the other side of the coin and be a little more bearish on Nike. So let's change that short-term growth rate now from 9% down to 6%. And with a 6% short-term growth rate, intrinsic value drops to $68. So slightly below where it's currently trading. Now, for me, this is not a company I would invest in, but I can see why people are looking at it as the stock price is down more than 30% over the past year and down more than 50% since their highs in 2021. And with the Olympics coming up, the stock could have a good rebound. But I look for companies I can hold for a few years, and I don't see that in Nike for me. But let's look at a few other data points before we move on. And the first is the PE ratio. See, 19.54. So it is below 20, but Nike typically trades at a higher PE. So maybe there is opportunity if you believe their historical PE, which is, I've noticed more in the 20s. Long-term debt to free cash flow, I like seeing under 3. You can see 1.28, so they're don't carry too much debt compared to their free cash flow, so that's a good sign. Dividends, as we looked at earlier, it's up almost 170% over the last 10 years. Dividend yield, it's only 2%. I would have thought that with the stock price dropping 30% over the past year, the dividend yield would be higher, but it is only 2%, so not anything too special. Share count, it is down 13.5%. I would have liked to see this a little higher for Nike. So hopefully they are able to buy back more shares in the coming year. And then net profit margin, I like seeing 10% or higher. You see over the last 10 years, they achieved that at almost 10.4%. In the last 3 years, 11.3%. So they're good on their profit margins. And one other data point I always like looking at is return on invested capital, which is very good for Nike. See, over 20%. I like seeing over 10%, and they're really in that 21, 22% range. So very good there. Now let's move on and we'll look at my portfolio's performance next. Here's the portfolio's overall performance, and the table in the top left provides a summary of the information, like when I first purchased a stock, cost basis, current stock price, total returns with dividends, and comparing the position against the S&P. Now, we'll look at a few of these investments. First, Snap-on, SNA. They released their results this week, and it was another lackluster quarter, which they contributed towards uncertainty in the economy and inflation. This used to be a great performer for me, but over the past couple quarters, it's been lagging. And now I'm hoping when interest rates are lowered and the election is behind us, this will help return the stock to some better growth. Next, NVIDIA. The stock had a little bit of a pullback this week, and I did purchase some more shares. Then PayPal. Again, this week I trimmed my position actually this week, and they do have their earnings call later this month. So depending on how that goes, I might sell out entirely. The last one we'll point out is United Rentals, URI, having a great month in July, up more than 12%. And that one is a newer investment from earlier this year. Now, hope you enjoyed this video, got some useful information. Hope to see you next time. Thanks for watching.